In Texas, the ground isn't just cracking under the heat, it's cracking under pressure. You can feel it everywhere. From Houston's high-rise offices to small-town diners where folks whisper about layoffs and rising bills, the same people who built this state with grit and faith are now staring at headlines they don't understand. Bankruptcies, defaults, restructuring. Something is deeply wrong. Texas was built on a promise: work hard, play fair, and the system will take care of you. But that promise is breaking. Wages are stagnant, property taxes are exploding, and Wall Street's quiet games are trickling down to Main Street. Families used to believe their homes were safe, the foundation of their future. But now mortgages feel like traps. Debt feels like destiny. And faith in the system? That's fading faster than a West Texas sunset. Because what's collapsing here isn't just the economy, it's trust. And once trust breaks, everything else follows.
Welcome to EstateScope, the channel where we expose the hidden forces shaping today's real estate markets. From climate risk to insurance pullouts to overlooked government policies, we break down what's really behind the headlines and what it means for your investments, your home, and your future. If you're into real estate with a twist of investigative reporting, hit like, tap subscribe, and ring the bell icon so you never miss a story that could impact where you live, what you buy, or how you build. Now, let's get into what might be one of the most overlooked real estate catastrophes of the decade. The domino falls. $2.3 billion vanish overnight. It started quietly. A company most Americans had never heard of. First Brands Group, the maker of spark plugs, wiper blades, and brake pads, filed for Chapter 11 bankruptcy in a Houston courtroom. 26,000 employees, 98 creditors, and a reported $2.3 billion. Just gone. Vanished. The court filings read like a crime scene. Hidden debt. Off-balance sheet financing. Shell subsidiaries with no oversight. It wasn't a business failure. It was a revelation. It takes just one or two human beings with a bad heart, Mitch said, to wreak havoc on millions. That line stuck with me. Because that's what we're seeing. Greed disguised as innovation. They called it factoring. Borrowing against invoices. Stacking hidden debt. Playing accounting games while pretending everything was fine. It's the same pattern we saw before the 2008 crash. Greed, fraud, and apathy. Only this time, it's worse. Because the contagion isn't confined to Wall Street. It's creeping into Texas banks, Texas bonds, and Texas communities. This isn't a New York crisis anymore. This is a Texas problem, and it's growing by the day.
The shadow in the balance sheet. The real danger isn't what's in the books. It's what's missing from them. Behind polished financial statements and investor updates are off-balance sheet debts. What Mitch and Travis call the black holes of modern accounting, the kind of numbers that don't show up until it's too late.
The company had a decent cash buffer, one report said, but it was fake, propped up by private debt and shadow banking.
And here's the thing. When companies hide their true exposure, investors get blindfolded, and regular people pay the price. When First Brands collapsed, the shock didn't stop at the factory gates. It rippled through the private debt market, the car parts industry, and right into regional banks. In Texas, small and mid-sized banks are tied up in similar webs. Billions in loans and securitized debt connected to industries now on the brink. One bad loan doesn't stay contained. It spreads, infects, multiplies. And just like 2007, everyone acts surprised when the dominoes start falling. But history isn't repeating, it's rhyming, louder. The quiet panic inside Texas banks. Here's what they won't tell you on the evening news. The collapse didn't stop with one company. It started exposing the fragile core of America's banking network, especially regional banks in Texas. These banks aren't Wall Street giants. They're community lenders, the ones who handle your mortgage, your small business line of credit, your paycheck deposits. But under the surface, they're carrying enormous leverage. the kind that turns a mild recession into a meltdown.
Regional banks have over $5 trillion in U.S. deposits, and they're levered up 40-to-1. That's $200 trillion in debt.
Let that sink in. $5 trillion in real money, $200 trillion in obligations, derivatives, and paper promises. This isn't sustainable. It's a house of cards built on blind optimism. And while the big banks get bailouts, regional banks get buried. They're the first to fail when rates rise and borrowers default. They're the ones most exposed to commercial real estate losses and auto industry bankruptcies, industries Texas relies on. The truth? This won't start on Wall Street. It'll start right here, in Waco, Lubbock, Houston, and San Antonio, where regular Texans wake up to frozen accounts, collapsing equity, and calls from lenders who sound just as scared as they are. The invisible war on mom and pop. There's a quiet war happening in Texas, not fought with weapons but with numbers. And the victims aren't hedge fund managers or politicians, they're mom and pop.
Mom and Pop can't bail out the banks this time, Mitch said. They don't have the money. The math doesn't work.
He's right. The median household income in Texas hasn't kept up with inflation. Texans are earning only about $400 more than they did in 2019, while groceries, gas, rent, and electricity have skyrocketed. Every paycheck stretches thinner. Every credit card bill feels heavier. Families that used to save now scrape by. Parents pick up second jobs. Retirees go back to work just to afford property taxes. And while Texans fight to stay afloat, government officials send form letters and Wall Street collects bonuses.
The state comptroller says he doesn't have the right to enforce. The attorney general says he's not the repository of the documents.
But to a family in Dallas struggling to pay $9 milk and a $2,000 mortgage, those bureaucratic shrugs sound like betrayal. This isn't just about economics. It's about the collapse of accountability, the quiet corruption that's pushing good, hard-working Texans closer to the edge every single day.
The fraud nobody will touch. What's happening in Texas isn't an accident. It's not just bad accounting. It's fraud. Institutionalized, protected, and ignored. Travis and Mitch have spent years uncovering the same patterns across the state. School districts issuing bonds they can't justify. Central appraisal boards manipulating property values. And cities quietly refinancing debt off the books. And when they asked for accountability? Silence. Letters came back from Texas Comptroller Glenn Hegar and Attorney General Ken Paxton, both disclaiming responsibility. We don't have the right to enforce. We are not the repository of the document. But under Texas law, the Attorney General is supposed to sign off on every school bond issuance. So if he's not keeping those records, who is? The truth is, nobody's watching the books anymore. The fox isn't guarding the henhouse. The fox owns it. And the longer this goes on, the more ordinary Texans pay the price. Higher property taxes, underfunded schools, and a cost of living that's being inflated by invisible fraud. The collapse of trust. Once upon a time, Texas stood for fairness, for a handshake that meant something. But now, those handshakes are worthless paper. Our society and our government have replaced life, liberty, and the pursuit of happiness, Travis said, with debt, leverage, profit, and lies. That's not hyperbole. It's heartbreak. Because behind every defaulted bond, every closed business, and every bankrupt homeowner, there's a story. A family who believed in a system that stopped believing in them. Texans were told property values would rise forever, that the markets were strong, that banks were well capitalized. But those were the same words used in 2007, right before everything crashed. And when it does, it won't just destroy numbers on a spreadsheet. It'll destroy faith. Faith in local leadership. Faith in the promise of hard work. Faith that this country and this state still rewards honesty. When trust dies, the economy doesn't collapse overnight. It rots. Slowly. Quietly. Until one day the damage is everywhere.
Wall Street's Texas problem. To Wall Street, Texas isn't a state. It's an asset class. Every farm loan, every small town development, every commercial building in Dallas, securitized, sliced up, and sold like poker chips. The people living here, collateral. Private debt markets have been feeding off Texas growth for years. Hedge funds, private equity, shadow banks, all handing out money at unsustainable rates, betting that the boom would never end. But the cracks are showing.
The fear is that private debt has been too hot, one professor said. It's been giving out money to companies that can't pay it back.
When those companies fail, it doesn't just stay on Wall Street. It spreads to the local banks holding the loans, to the builders waiting for payment, to the homeowners watching property values sink. In the boardrooms of Dallas and Austin, you can already feel the unease. Executives whispering about exposure, regulators quietly revising reports, and investors pretending everything's fine. It's not fine. And deep down, they all know it. The human toll. Here's the part Wall Street never talks about. The people. When you walk into a grocery store in Texas today, you can feel it in the air. That quiet tension. The sigh at the register when the total flashes higher than expected. That isn't just inflation. That's exhaustion. Families are working harder and earning less in real terms. Renters can't buy. Buyers can't qualify. Homeowners can't breathe under property taxes that rise faster than their paychecks. Meanwhile, Wall Street calls it monetary tightening.
Inflation is fraud, Mitch said. It robs you of purchasing power, and that's how the system survives.
He's right, because this system doesn't create value anymore. It extracts it from teachers, nurses, mechanics, and small business owners who are too tired to fight back. Every dollar that disappears into off-balance sheet debt is a dollar that could have paid a teacher's salary or funded a local hospital. But that's not where it goes. It goes up, to the people who designed this game and made sure the rules never applied to them. And when the crash hits, they'll call it a market correction. But for regular Texans, it'll feel like betrayal. History repeating itself. If this feels familiar, it should. We've been here before. 2007, 2008, the housing bubble, the bank bailouts, the speeches about temporary pain. Even President George W. Bush later admitted it.
This was not a case of regulation, it was a case of bad decisions in the private sector.
And he wasn't wrong. But here's the catch. Nothing was fixed. The same reckless incentives that drove the last collapse are back, bigger and better hidden. Mitch warned about it years ago. The same bond fraud, the same shadow banking, the same willful blindness. And now, those chickens are coming home to roost in Texas.
Mom and Pop can't bail out the banks this time, he said. There's no math on this planet that allows it.
He's right again. The median household doesn't have the savings. The middle class doesn't have the margin. The safety net is gone. So when the next domino falls, whether it's another First Brands, another Hallmark, or another Texas school district, there won't be a soft landing. There will just be fallout. And this time, it won't stop at Wall Street. It'll hit the neighborhoods, the schools, and the communities that never asked to play this game.
Texas leadership and the Great Deflection. When Texans started demanding answers. When whistleblowers like Mitch and Travis uncovered financial corruption, the state's leadership turned away. "We're not the enforcement agency," said one letter from the Attorney General's office. "We lack jurisdiction," said another from the comptroller. That's not leadership. That's evasion. Ken Paxton, the same man who once campaigned on protecting taxpayers from waste, has remained silent while billions in hidden municipal debt circulate unchecked. Glenn Hegar, Texas comptroller, publicly warned of budget pressures, but failed to address the billions missing in bond oversights. Meanwhile, local governments continue borrowing like there's no tomorrow. Because in this system, there doesn't have to be. The profits come today. The collapse comes later. The problem isn't just numbers on a ledger. It's moral decay at the highest levels. A quiet deflection of duty, dressed in polite bureaucratic language. When oversight becomes optional. Oversight only works if someone wants to see the truth. The Texas Bond Review Board, the Office of Public Accounts, even the AG's legal division. Each one claims to review, but none actually audit. It's a paper shuffle. When Mitch confronted them, he said, "The system's not broken. It's working exactly as designed to protect the insiders." And he's right. The laws are written so loosely that every loophole looks like an invitation. Meanwhile, school districts issue bonds with barely disclosed interest schedules. Cities refinance long-term debt just to delay payments. Every time they push the can down the road, local taxpayers become involuntary co-signers to someone else's greed. That's how Texas, a state built on independence, became addicted to invisible leverage. The illusion of prosperity drive through Austin, and you'll see cranes dotting the skyline. New condos, new tech offices, new towers of glass, a monument to endless growth. But growth built on debt isn't prosperity. It's a mirage. Behind those glossy real estate brochures are loans financed by private equity firms that don't care about sustainability. They care about yield, and the irony? Many of those firms aren't even Texan. They're headquartered in New York, Chicago, or overseas. They profit when Texans buy high and lose everything in the downturn. When there isn't disclosure, Travis warned, there's always corruption. Every tower that rises in downtown Austin is built on borrowed confidence and borrowed time. Because just like in 2008, when confidence dies, credit dies. And when credit dies, the skyline stops growing. The pain spreads outward. It doesn't stop with banks or buildings. It spreads to schools, hospitals, and small towns. When a city overborrows, property taxes rise. When property taxes rise, teachers get underpaid, and home buyers get priced out. When people stop buying homes, small businesses suffer. It's a domino effect, invisible to the casual observer, but devastating to the everyday Texan. Take rural Texas, for example. Towns like Kerrville, Temple, and Henderson are watching young families flee because they can't afford homes or childcare. And the ones who stay, they drown in credit. The media will tell you unemployment is low, as if that's proof of health. But having a job means nothing when your paycheck buys less every month. This is the quiet crisis. The one that doesn't make headlines, but breaks people slowly. The middle class meltdown. Every economic crash needs a victim. In this one, it's the Texas middle class. They're the ones who played by the rules. Bought homes, paid taxes, worked 2 jobs to stay above water. And they're the ones now trapped in an economy where doing everything right no longer guarantees safety. Inflation eats away at savings. Housing eats away at hope. And corporate greed eats away at faith. The middle class is being erased, Mitch said, not by accident but by design. That's the harsh truth. When you allow leveraged debt to replace earned income, you destroy the foundation that holds the economy together. And while politicians talk about Texan resilience, resilience has a breaking point: the Wall Street connection. You can't understand what's happening in Texas without looking at who's pulling the strings. Private equity firms like BlackRock, Apollo, and Brookfield now hold massive stakes in Texas property, energy infrastructure, and even housing developments. Their influence is everywhere, from construction financing to utility contracts. They call it investment, but what it really is control. They buy the homes, raise the rent, and call it growth, Travis said. But that's not growth. That's extraction. Wall Street doesn't care about the communities they invest in. They care about yield curves and exit strategies. And every dollar they extract comes out of Texas households, out of the savings accounts, grocery budgets, and retirement dreams of everyday people.
The human cost of corruption. When we talk about economic collapse, it's easy to picture charts, not people. But this story is full of people. the kind who never make it onto CNBC, the teacher in El Paso who took a second job to afford rent, the veteran in Dallas who lost his home when the mortgage rate adjusted, the nurse in Austin paying $1,800 for a one-bedroom apartment. They're not statistics, they're casualties. And while politicians argue on television, Texans are watching their stability evaporate. You can't buy back hope once it's gone. That's the tragedy of this crisis. It's invisible until it's personal. A government asleep at the wheel. What's worse than corruption? Complacency. Governor Greg Abbott promises strong Texas leadership. But where is that strength when families are being crushed by property taxes and hidden municipal debt? Where's the leadership when corporate developers overcharge and underdeliver? Even Senator Ted Cruz, who once championed deregulation, recently admitted there's a reckoning coming for the debt markets, and it's going to start locally. But no one acts until it's too late, because political donations and private equity relationships buy silence. The watchdogs aren't asleep. They've been paid to stay quiet. The Texas reckoning. At some point, every illusion collapses under its own weight. The bond markets can't hide the holes forever. The property bubbles can't inflate without bursting. And the public won't stay quiet once the truth hits home. You can already feel the ground shifting. More defaults, more layoffs, more local investigations that never make the evening news. But this isn't just a financial reckoning. It's moral. Because the system didn't fail on its own. It was corrupted deliberately. The same people who promised prosperity built an economy that feeds on instability. And unless Texans confront it now, through reform, transparency, and accountability, the future will belong to those who profited from the collapse. The last stand for the Texas spirit. But here's what they didn't count on. Texans don't quit. Every storm this state has faced, from hurricanes to blackouts, we've rebuilt from. And this crisis, as dark as it feels, can be the same. If the people who caused this won't fix it, we will. By demanding transparency in local finance, by holding leaders accountable, by refusing to stay silent when greed disguises itself as growth. Because the Texas spirit wasn't built on Wall Street's permission. It was built on courage, honesty, and hard work. So, if you're watching this, you are the resistance to corruption. You are the voice they hoped would stay quiet. They may have taken our stability, Mitch said, but they haven't taken our will to fight. And that's the difference between collapse and comeback. If you made it this far, you're already ahead of the narrative they want you to believe. Because awareness is the first step to freedom. Stay alert, stay informed, stay.
That's all for now. But I'd love to hear your thoughts. Drop a comment, hit that like button, and share if you found this useful. Check out EstateScope on YouTube to watch the full story and more deep dives like this one.